if this wholesale lending cycle is to play out, this time the competition might be different, because in the last cycle, public sector banks were not a player. They were so badly hammered with the previous mistakes of the previous cycle, they could not participate. You just kept on getting share from them. But they seem to have cleaned up their act now. The SBIs of the world are back in the game. So how important a factor will competition be with a cleaner, leaner public sector coming into play on the corporate side?
No, the public sector banks have become quite aggressive in the marketplace. And right now you named only SBI. I'm seeing 5-7 banks which have become very, very aggressive. And the way they are playing their aggression game is to give a slightly lower price. So you have seen compression of spreads or NIMs on the wholesale side of the business. You have seen regulators and some people publicly talk about the fact that are you getting paid for the risk you're taking? And that's a question we have to ask ourselves. So right now, earlier some banks were aggressive, now they have curtailed their aggression, but some new public sector banks have entered the space. Hopefully at some stage, NIMs will become important to them, they will curtail their aggression. And that's why, for example, in case of Axis, our growth on the wholesale side has been quite tepid. Because we believe the prices we are getting is not paying for the risk and the capital we are putting behind those assets. Why should we unnecessarily take those assets on board? We have deep relationship with those corporates. At the right price, we'll do business with them. Why should I do business with them for the sake of just doing business? So, yes, they are being aggressive. And that's what I say. Are we making some mistakes today which will play out 5 to 7 years down the line? So we might say, okay, NPL might not happen. But if you also don't price the risk well, that is also a mistake. It's not only thing of NPL will not happen, but you are making a mistake where you're not getting the right return on the capital. So it is a mistake in my mind.
Speaking of competition, who would you say is a bigger competitor for you? Would you say it's the public sector bank which is cleaner now? Is it a fintech? Is it the Bajaj Finances of the world? I mean, who do you see as a bigger competitor?
So competition varies depending on which business we are talking about. I think on the wholesale side, there are about 5 to 7 banks which can actually, 5 maybe, which can provide end-to-end full suite of services. On the retail side, the competitive set is much larger. And when you talk about fintech and players like that, they are coming and attacking the juiciest parts of your business because that's where you can potentially make money. Now with RBI coming in with some regulations and very rightly so, I think the fintechs are realizing that there are only 2 ways you can play this game. One is that you come through the front door, take the right license, and then get supervised and regulated by the regulator. Or if you want to play outside the room, then you can do only certain activities in a certain way. Then you become a kind of a quasi-distributor. And you become a sourcing entity for the banks who are playing inside the room. So fintechs will remain competition. They will keep looking at what are the businesses which make the maximum amount of money for the banks, and they'll keep attacking it. I think we also ignore the fact that both the government and the regulator are also creating platforms which are making it much easier for competition to go and tap any customer. Platforms like account aggregator, platforms like where, for example, RBI has gone and completely digitized Kisan credit loans and stuff of that nature. So as either the government or RBI keeps creating these platforms which make it easier and simpler for any player to come in and play on that platform, if you're not smart enough, if you're not aggressive enough, if you're not on that platform, you could potentially see your customers going to someone else. So that's second competition which we cannot ignore. Third obviously is the NBFCs. Bajaj is one of them, but there are others also who over a period of time have demonstrated that they can play this game as well as the banks. At some stage, a question would be asked when they become large enough, like in case of HDFC, whether you become part of a bank or you continue to play the game, as an NBFC. RBI is very clearly imposing more and more rules and regulations on NBFCs and reducing the arbitrage between banks and NBFCs. And as this arbitrage goes away, the cost of doing business rises. And when the cost of doing business rises, then either you have to look at your growth and see whether you can grow, or your margins will come down. But please also understand that lot of, for the banks especially, RBI is very, very focused on ensuring customer conduct is right. Very, very clear on focusing that IT infrastructure keeps pace with the growth in consumer expectations and demand. Cyber security has become a huge risk. And why I'm listing some of them down is to say that the amount of investment required now to play this game is also going up manifold rapidly. So when that happens, when the risks in the systems are varied, when you're seeing competition coming from fintechs and platforms and NBFCs, it tends to speak to larger players. Only larger players can manage this massive change which is happening around them. So somewhere the smaller institutions will be forced to ask themselves the question, which business do I really play in? Because I cannot play in every business. I don't have the means and the wherewithal. So I also expect intense and sharper competition in some slivers of business where the smaller institutions will try to play only that business. So competition will come from all over.